Eric Muathe, Muathe.com. Let's take a look at the Nifty, and it is for February 13th, 2017. I'm sorry I was not able to do a wild market video analysis this past weekend, but let's take a look at the Nifty, and it's traded at least 1 week, or 1 day today for the week, and it is still showing a nice uptick over the last couple of weeks. But before we take a look at the weekly, let's take a look at the daily, because the daily here continues to show nice movement and has been holding above 69.1 pretty much over the last, let's say, about 2 weeks or so, maybe more than that. And as long as the Nifty is pushing its daily RSI above 69.1, quite frankly, the market should be stable to bullish. The hourly also does show good support on the hourly over the last couple of shallow pullbacks. Market's been coming back and testing this line hour to hour over the last week or so. It's been bouncing here. So as long as the daily is above 69.1, as long as the hourly is bouncing on this line, the market is sideways, even bullish at best. Now on the weekly is where we see a little bit of a reason why the market could be stalling. Not necessarily stalling, but you can see the pace of movement has reduced. In other words, it was going at a very fast pace, but now over the last couple of weeks we've just kind of hung around here. And I think the reason would be because it is potentially coming back to test this line we discussed previously. So this is one view that ultimately what we are doing here is coming to test this line. If we can't move above that blue line, then that's a reason for a pullback. And it could also be that we are pretty much just coming back to test this back test line here. This was the break point of the highs of late 16, and now we are coming back and back testing that line. So failure to move above those two lines on the weekly could be the reason why we've come off the fast pace and we seem to be stalling around here. But as long as the daily and the hourlies are constructive, that's a good market. On the monthly, keep in mind we are drawn a line where we're expecting either to see a nice move above the line, a short-term breakout, or resistance. And here in the middle of the month of February, still not sure which way it wants to go. Obviously, if you're bullish and those who want to see the market move higher want to see the market trade above that line of resistance. Otherwise, failure to move above that line and confirmation of resistance here ultimately brings this market lower. Now, if you were to summarize the Nifty right now, you'd say it's stable to bullish based on the hourly, daily, and even the monthly looks okay. The weekly is where there's a little bit of a problem, but net the market looks stable to bullish. Let's take a look at some of the stocks that I believe you still own, and we begin with NHPC, and really a little bit of a sideways move over the last couple of weeks. You know, we've kind of been hanging around here between the $29, $20, $30, $31 range. I would say as long as the monthly is still looking decent, there's no reason to be looking for an exit here. So as long as we have our MACD trading at 3-year highs, we got a crossover above zero. So crossovers above zero are more reliable on the MACD. And we have our RSI looking to still probe 3-year highs. I can say that NHPC remains a decent candidate to hold as of right now. Keep in mind, as far as the price is concerned, we are working on month number 2 since the breakout, and a follow-through month always indicates intent, or at least confirmation that the breakout was not a fake. As of right now, all these things are lining up pretty well. We take a look at INDIAGLYCO. And here again, it looks decent. There was a previous breakout, as you know. It cleared that resistance on a weekly closing basis, which was this week. We went higher. Subsequently, we settled down for more than 2 weeks here. And since that time, the market has cleared that previous weekly closing high at about 165, and we've been trading above that since. So the breakout on the weekly continues to be intact, which is what you want to see. Also, on the monthly still continues to look good. As you can see, you got all your indicators at 3-year highs, which is exactly what a bullish stock needs to confirm. So MACDs at 3-year highs, RSIs been trading at 3 years for a while. The RSI needs to hold above 69.1. Little bit, it's come off a little bit, but as long as it is staying and trying to stay above 69.1 with all this MACD and RSI minimum requirements being met, holding above 69.1 would be the next thing you'd like to see, because that would indicate very, very strong intent to move higher. Let's take a look at the last stock on your holding as far as I'm concerned, unless you update it, and it is HINDCOPPER. And here let's take a look at the monthly. The monthly is still decent. As you can see, it does meet the minimum requirement on the MACDs at 3-year highs. We had a recent crossover above 0, which is more reliable, and we have our RSI trading at 3-year highs. So in terms of minimum requirements, no problem here. We see that we have our price breakout also on the monthly taking place, and as long as this monthly breakout is holding up, there is no reason to be looking to get out of this idea. As long as it is breaking out, I think you continue holding it as long as it is above the monthly closing high for 2016 at about 66. So if it can hold above that level, it continues to be a good candidate. One thing I can say here is also, if we take a look at the commodity ETF, because we also do need to account for commodities, we can also see that commodity ETF, the Nifty commodity index, is still holding up very well with the RSIs and MACDs at 3-year highs. So that might also help some of your commodity plays if the commodity index as a whole is performing well. You can see here it is moving to 3-year highs. As of right now, RSI is also above 69.1. So that's also something else that is encouraging for those who own commodity names, and one of the MACDs is trading at 3-year highs. So if commodities are to do well, you'd insist that the Nifty commodity index stays with its monthly RSI above 69.1 as a sign of strength. Ultimately though, one thing I should say here is we need to be careful, because if this doesn't hold above 69.1 and rolls over, it might actually be a sell signal based on the long-term monthly chart. So right now it looks good, but based on the long-term monthly chart, and let me zoom in here, and what I'm talking about here is the previous break was here, and I think I've discussed this with you. There was a break there in 2008 before a major plunge here, and so we draw a line from there, and you can see that it's been a problem. For example, we touch that level for those highs, we come and touch those with uniform activity for the highs here, uniform activity rejection for the highs here, and you can see that if this is coiled, recoiled, rejected, and cannot move above the blue line, let's say it forms a double top here, that would be a major sell signal. So definitely you'd want to insist that it holds above 69.1 as a sign of a strong potential movement. And I did mention previously, last time it held above 69.1 was here in 2007 going into 2008, and that was the technical reason, in my opinion, why it had this major move. So looks good as long as it's holding above 69.1. Overall, Nifty is looking good, your stocks are looking good, commodity index is looking good. All that says, without knowing what tomorrow, next week, next month brings, we have to continue holding, because there could be more upside. Otherwise, if it turns around and things turn nasty, we should be able to see that on the charts, giving us enough time, ample opportunity to get out of those holdings. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Let's keep this conversation going. I am out.